Hello and welcome to the Global Pulse. The US economy is at a crossroads. While some indicators point to continued growth, market says otherwise. Layoffs are increasing at an alarming rate. Hiring has slowed significantly. Consumer confidence, a key driver of economic activity, is waning. These trends taken together paint a picture of unease and uncertainty. The labor market, often a bellwether of economic health, is flashing warning signs. February saw the highest number of layoffs since the Great Recession and the pandemic. This spike in job losses extends beyond the private sector, with the federal government shedding thousands of jobs. Businesses are hesitant to hire, citing trade policy uncertainty as a major concern. This hesitation stems from a confluence of factors. The ongoing trade war with China, Canada, and Mexico, coupled with tariffs on various goods, has created a volatile business environment. Inflation, though currently moderate, remains a concern for businesses and consumers alike. This uncertainty is reflected in the stock market's performance, with major indices experiencing volatility. The economic landscape is undeniably complex. While some argue that the fundamentals of the US economy remain strong, others point to these troubling signs as harbingers of a potential downturn. One of the most contentious aspects of the current economic climate is the issue of tariffs. The Trump administration's imposition of tariffs on goods from China and other countries has created a ripple effect throughout the global economy. While the stated aim of these tariffs is to protect American jobs and industries, the reality is far more complicated. Businesses, both large and small, are grappling with the uncertainty created by these tariffs. The on-again, off-again nature of trade negotiations has made it difficult for businesses to plan for the future. This uncertainty has led to delays in investment and hiring as businesses adopt a wait-and-see approach. Moreover, tariffs have contributed to rising prices for consumers. The cost of imported goods, from washing machines to steel, has increased, putting upward pressure on inflation. This increase in prices erodes consumer purchasing power, further dampening economic activity. The impact of tariffs is not limited to the United States. Our trading partners have retaliated with tariffs of their own, creating a tit-for-tat trade war that harms businesses and consumers on both sides. This trade war has injected a level of volatility into the global economy, making it more susceptible to shocks. The Trump administration's restrictive immigration policies have further exacerbated the economic challenges facing the United States. Industries such as agriculture, construction, and healthcare, which rely heavily on immigrant labor, are facing severe labor shortages. These shortages are driving up wages, making it more expensive for businesses to operate. The agriculture industry, in particular, has been hit hard by these policies. Farmers across the country are struggling to find workers to harvest their crops, leading to lost yields and higher food prices. The construction industry, already grappling with a shortage of skilled workers, is facing even greater challenges as the pool of available labor shrinks. In the healthcare sector, the shortage of nurses and other medical professionals is reaching crisis levels. Hospitals and clinics are struggling to meet the needs of their patients, and wait times for appointments and procedures are increasing. This shortage is particularly acute in rural areas where access to healthcare is already limited. The Trump administration's decision to implement federal job cuts has further dampened economic activity. While the stated goal of these cuts is to reduce the size and scope of government, the reality is that they have a ripple effect throughout the economy. Federal employees who have lost their jobs are cutting back on spending, leading to reduced demand for goods and services. This reduction in demand is felt by businesses across the country, from restaurants and retailers to manufacturers and service providers. Moreover, federal job cuts have a disproportionate impact on certain regions of the country. Many rural communities rely heavily on federal jobs, and the loss of these jobs can devastate local economies. These job cuts also reduce the availability of essential government services, further impacting the lives of ordinary Americans. The technology sector has recently experienced a significant downturn, with the S&P 500 entering its first correction in over a year, marked by a decline of more than 10% from its February 19th high, resulting in a $5 trillion loss in market value. Companies like Apple, Microsoft, and Tesla have seen substantial stock price declines. The Magnificent Seven stocks have plummeted and they lost billions of dollars. The collective net worth of 8 prominent tech billionaires, including Elon Musk and Jeff Bezos, has decreased by approximately $266 billion, influenced by significant stock price drops in companies like Tesla and Amazon. The broader economic implications of this tech stock decline include reduced consumer confidence, potential slowdowns in tech-driven innovation, and a re-evaluation of investment strategies focusing on technology companies. The economic outlook for the United States is uncertain, with more risks than opportunities on the horizon. The path forward will depend on a variety of factors, including the outcome of trade negotiations, the implementation of immigration policies, and the Federal Reserve's response to changing economic conditions. If you like this video, please like, share, and subscribe. Keep watching.